So good morning, active traders, and welcome to our live event. I'm Ken Calhoun from Trade Mastery and Day Trading University, coming at you live here on Saturday, February 11th, 2023 already. So happy Valentine's Day. And who do you got for the bowl? Who do you think, Eagles or Chiefs? Eagles or Chiefs? Who's gonna win the big game? What do you guys think? Who you got? Eagles or the Chiefs? This is the part where you type in which team you think is going to win the Sunday Super Bowl. Just to be really crystal freaking clear, Eagles or Chiefs? Eagles, Eagles, Eagles. So far, it's all Eagles. Wow, thanks, Deb, Judith, William, Steve, Will, another Eagles. Hey, John. Wendy says Chiefs. Okay. Dan says Chiefs. We'll keep them coming. Chiefs. It looks like the Chiefs are like 3-1 for Eagles. Okay, John. Thanks, Daphne. Hey, Dan. Hey, Tom. Hey, Greg. Wow, so many, they're scrolling by. Well, thanks for voting. Much like a football game, you want to make sure that you practice both offense and defense. And what I mean by that, what that means to you in your trading is make sure that you have both defensive stop losses and offensive scaling in or position sizing. Make sure that you do both. Like my colleague, the great Tom Sosnoff says, trade small, trade often. That's exactly right. You got to take a lot of shots at the market and try and make as much money as you can. Let's take a look at some charts. We're going to start off the Terex. This is a great chart. TEX, this is my favorite chart for a swing trade so far. TEX, it has, everything lines up, but we'll come to that in just a minute. We'll start off today's broadcast by looking at the S&P and the VIX, and then we'll take a look at individual stock charts for both swing and day trades and see what's alive and cooking. Now, market's pulling back off support. It's still in a relatively strong uptrend, though. But 4,100, just a couple handles up. Market lost support. 4,100 is a key support level that it broke under yesterday and Thursday, or held under yesterday, broke under on Thursday. You take a look here. I'm not going to draw lines, but this is previous resistance is right near the 4,100. Obviously, major R1 is 4,200, just around 12 handles up. And we've got our S1 that we just broke under 4,100. Next support level is obviously down there near the 200, near the 3960. I don't think we'll get there. This is an uncertain market. It's a pullback and a rollover after an uptrend, and we may well be due for more selling ahead. But we've got so many great charts that are still going up. You want to play both sides of the fence in terms of both long and short bias instruments. If we take a look at the VIX, you have a shooting star, right? Shooting star yesterday. And so the VIX 20 has kind of been the line in the sand, the support resistance level or the regression line about which the VIX has rotated the last month has been around 20. Now the shooting star, that's this candle here. It's the red one that looks like a box with a stick on the top. That's usually a reversal sign. So that would say overall that's net bullish for the market because it's saying the VIX may go back down. Okay, so this is overhead resistance all the way up to 22. So VIX SR, we're going to use 20 by 22. Very common for professional traders. We always use the VIX. The 20 is going to be S1 and the 22 is going to be R1. So when I go long the market, if we get under and stay under the 20 following the shooting star on Friday, that's very important that you understand. Be sure to learn candles from my colleague Steve Nissen at candlecharts.com. It's a huge help. It's critically important to add candles to your Western technicals. I've got the 50 and the 200 SMA here. Got kind of a death cross back here, right? A death cross. And sure enough, things went down. We got a little recovery here. Shooting star says the VIX may well keep going down. So what that means to you as a trader is, for those of you who also trade inverse instruments like SQs and UVXY and so forth, we don't want to scale into those instruments. We do not want to build a big position in those instruments unless the VIX gets over the upper tail resistance of the shooting star. So the VIX has to get over 22 and stay over 22 before we short the market, or before you start buying index puts, whether you're doing 0 DTEs or weeklies or monthlies or whatever time interval you're using for option put plays. Just be aware that the shooting star means we may have a long bounce in the market Monday or Tuesday, and then we may well get selling following that. So that's the most important market technical indicator today. Nobody else in the world's talking about it. I mean, now so many people are no, including no doubt a lot of my competitors will copy me, but you heard it here first. Keep an eye on the VIX. We have a shooting star, which is net bullish for the market because the VIX goes down, the market goes up. So for that reason, I'm going to 2050 is the technical support, but I round down to 20. So if we get under 20, we go long the market. Okay, if we get over 22, we go short the market or buy inverses. All right, now having said that, let's take a look at some rock star charts. Now, if you folks have any tickers you'd like me to pull up, and again, I apologize if there's a lot of them scrolling by and I will no doubt miss them. Just repost them if you don't see them, please. I only have space to see like 8 people at a time, and I got hundreds here, so things are scrolling by, so I try to catch up. WTI and Oxen. We'll go over your guys' charts in just a second. That's my favorite part of the broadcast because so many of you are really smart people, so I'm really honored to see your participation. And it's a lot of fun for me too, because I can pull up charts and tell you if they suck or not, or if they're worth trading in my humble opinion or not. So we'll take a look. So far, this looks to be the best chart of the day, right? Or of the week. Terex, TEX. The first thing we look at is the right side of the chart. Remember the range. Range has to be like a 2-to-1, or at least a significant, it doesn't have to be 2-to-1, but at least a significant range. And here we've got a range on this chart. Price action range shows 41 to 55. That's good enough. We've got a big green candle on Friday, and it's in a good strong uptrend. So breakout over 55 would be likely. Again, not trading recommendations, but my own, what I'm looking at for my own trades. Now, oil has been strong, right? Energy and oil, that's the sector to beat. We've been strong energy lately. So now this British Petroleum looks good, but what's the problem with this chart? What's the problem with going long up here at 41? Who can tell me? I mean, price action is going up. Now, this is a good example of if you're just a price action trader, you're going to lose money because it's not just about price. It's about, yeah, Wendy's right. Ernina's right. William's right. Terry's right. Okay, good. You guys are all right. Smaller candles. That means, like my colleague Steve would say, Steve Nissen would say, bulls are maybe running out of steam. But when you see a pattern, you got large green candles getting smaller and smaller and smaller, so it's starting to roll over. It may drop, right? Now, is it still something worth trading? Yes, but not blindly. I would not buy it right over 41. Whenever you see a suspect, oh, by the way, for those of you trying to chat and raising your hand, please click on the chat text box and type your question there. I can't raise hands and all that kind of stuff. Anyway, I can't answer the raised hands because it's me and hundreds of you guys out there. So just click on the chat text bubble. Anyway, so what you look for is a pullback and then a resumption, okay, of the uptrend. So does that make sense? You want it to be tested by sellers because they're surely going to come in. If you're in this long, you trail a stop where? 40, right? And how to say, the bad trade would be to buy right over 41, which a simple, simplistic price action trader would incorrectly do. The intelligent professional traders trade, stuff that I like to do is wait for a pullback, say it goes up to like 41.30 and then craps out and goes down to 39 and then slowly grinds its way back up over the 41 end of next week. And the week after next, it's up at say 42.20 or something. That might be the place to go in. Okay, so when you see a declining volatility, you can wait till it pulls back, it craps out, and then it resumes its uptrend, and then go in above the high. Okay, that's just a quick for tech. And speaking of football, that's a good example of a defensive strategy. Okay, here's another chart that's in motion, AVRO, and we're going to take a look at your guys. Wow, a lot of you guys too. Look at those two. AVRO, for those who trade cheap stocks, I like this because it ran from the dollar to the $1.90. You know, I'm the whole number guy, right? You may have seen my articles in stocks and commodities and whatnot. This would be good over 2, but we don't want to buy right under the 2 whole number. So not a trade recommendation, but I would buy this over, say, $2.05, $2.05 or $2.10, something like that. So if it does break on, we would expect it to go up to the 2, chop around, and then go up if it's going to go up. So we don't want to buy right under a whole number resistance, but above it, you're good as right as rain. All right, here's another halfway decent one. NE, the ticker, another, I believe, energy sector instrument. The range isn't great, but the uptrend is okay. I like this G and W chart better. For those who trade cheap charts, this is a really good example of a $5 stock that's been going up for a while. It doesn't have much upside to it in terms of the range, but it's got a consistent trend, which in a choppy market is a plus. And one other factor that makes it a plus for me is this particular pattern. The reason I picked this chart was to share with you one of my favorite breakout patterns, and that's a large candle, a large green candle in an uptrend right underneath a whole number. So we expect some noise and some chops, some pullback and wiffle waffle, near the 6, but once it breaks on through, say it gets over 620 or so, it's maybe good for an upside run. So keep an eye on GNW. Another chart that we've been calling in the live room has been Tesla. Okay, this has been a good runner. I've been calling it from the 122, I believe, for a swing trade. I've been doing day trades on days where it's volatile, and it's ran all the way to 200. I told traders when it broke the the 50 SMA there at the 150, it'd be good to 200. And I was right? For all of you who are my live room members, congratulations. I did call it long, remember 150.7, something like that for a swing trade. And I said, next stop 200. I had a couple of traders who were skeptical. Well, I was right. 200 was the target. When it ran up there, I said, sell the 198, right? We always sell right under major resistance areas. So that was the entry. I gave it to my traders on the silver platter in the 150s and then sell right under the 200. Again, speaking of the live room, I do have a special. For those of you who are fellow football fans, we've got our touchdown special this weekend only. It's at trademastery.com/touchdown. I designed that graphic. It was a lot of work, or I should say I modified the graphic for my company. So anyway, my pitch is score a personal touchdown in your trades. I already have several members that just joined, so thanks to all of you, a handful of you joined last night. It's just $4.95 or $4.97, something like that, for 3 months. So for just under $500, that works out to just like $160 a month, and it's a good deal. You can join me in the live room. I give you specific entries for day trades and swing trades, and things like exit targets and stops every single day. And we've got a lot of smart people in the room, and often they give me really good charts that we pull up and give good alerts for as well. So do take a look at that. It's at trademastery.com/touchdown. Let me see if I can get this lined up. Anyway, keep an eye on that. Let's take a look here at our other charts. I'll get this all lined up. All right. After Tesla, we've got Apple. Now, Tesla's good if it breaks new highs. Tesla has a long room to run. Let me just wrap up there with Tesla right quick. But where is it touching? Well, what's that yellow line? I apologize if you can't read it well. It's the 200 simple moving average, right? So we always use the 50 and the 200. It's called what I call a golden highway. If you have something that's down and it breaks the 50, next stop exit target is the 200 simple moving average. And this is on a 90-day daily candlestick chart. So when you have something that comes from below, what I call a Jaws trade, like a shark, dun 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 dun, comes from below, it breaks the 50, boom, you pull the trigger, and then exit target, you tighten the trail stop as it runs up, and look to exit somewhere up near the 200. And that's a really good window of opportunity to trade within. That was one of my better calls for swing trades. That and cold was my best one of the year so far, KOLD, but this is like second best because I called it right over the 150 and I said it would exit target's 200, and it hit it. Mission accomplished. Bum, bum, ba, da, dum, bum. Tesla is good. All right, we got a lot of charts to go through, so let me quickly run through these. Apple is up. It's over the 200, so that's good, and it's a good up chart if it breaks that 158. AI also a good up chart. It's kind of it's what I call kind of a bottle rocket chart. Bottle rocket shot up, but then it started to pull back. So in these pullback charts, they're usually dangerous to trade within consolidation. You may be tempted to buy the 24, 25. That'd be okay for a day trade, but not for swing trades. For swing trades, we'd still want to wait to new highs because that's where institutional traders will start to come in. Now, CBAY is one that we called earlier, but now it's starting to go sideways. So this is a good example of if you'd bought it. I've been covering it here in these Saturday events. One of you guys had mentioned this one a couple of months back, and we followed it ever since, and thank you. It went from 4 to 8. It doubled. We've been calling it long for you guys here right over the 4. I think it was 420 or something back in, I think it was December. Anyway, CBAY ran out all the way from $4 a share up to 8. This would be a good place to take capital out or to close the trade or at least tighten a trail stop to just under $8 a share. This is a good example of a decelerating chart. So once you're in it and it's run up and then it goes sideways, put a stop right underneath it, or just go to cash if it takes longer than a week to keep going up. I don't want to tie up my capital in things that are going sideways. So if it does lose support at the first sign of loss of support, or if it just keeps on going sideways for another day or two, I'd close out the trade for a big epic win, right? You could have potentially doubled your money if you bought this where we mentioned it back at 420, I think 425, something like that. Ran all up to 8. So that's a good chart. CBAY. Now, one of my biggest wins that I'd mentioned here for you guys as well. Hopefully you guys remember over the last couple of months, I've been pounding on the table saying cold is along over the 20, and then again over the 30, and then again over the 40. Now's the time to stick a fork in it, all right? If you're long cold, great. You would have doubled your money or tripled, well, up to almost tripled your money. And if you remember, I was calling cold long here in these Saturday events the last 2 months, as well as in my live room for intraday and tighter entries and exits. Anyway, really good performer, natural gas inverse. I've been telling you guys it'd be a good play, but now it has a rollover pattern with large red candles. I'd sell it all. That's what I told my members this past week is, let's get out of cold if it loses the 65 or 63, I think it was. That's where I sold mine, by the way. I was in it in my Interactive Brokers account. I bought this at a cost basis of $21 a share in my IB account. It's true, I bought a 21 a share and I sold 63 was my trail stop. Now that's an epic round trip, right? In at 21 out of 63, that's almost exactly triple my money, right? Now, do you guys all see that this is a selling chart that you shouldn't be holding along here, or at least trail a stop at 55 chart, okay? Now, BOIL, its counterpart, BOIL, is a good up chart. Now, lift fell out of bed, LIFT, zeroing back down to support. I like charts like this because it gapped all the way down to an exact previous support range, right? Near 10. 10-ish was the play. Now, where's the long signal using the 50 SMA? It'd be somewhere north of lucky 13, right? So it'd be risky to trade it here now, but if it does get enough strength to get over that 13 simple moving average, you can see last time it broke and held over the 13, it ran all the way up to 18, so that's a good play. This is a bearish engulfing. This gave you plenty, it was a signal to sell right there, right? Bearish engulfing, and I learned that from Steve Nissen. Make sure you learn from Steve at candlecharts.com. Bearish engulfing, the sell signal occurred right before the big ass drop, right? So you had plenty of, well, you had one day to get out of town before it made a big drop. So you had a bearish engulfing that flashed a sell signal on loss of the big red candle support near 1670. And right where I'm pointing, that's the sell where you should have put in a sell stop order if you're in this, right? And gap down. Now if it recovers, maybe good for a bounce. We're going to wrap up here soon. Let me blaze through these right quick. FIGS, not enough range, not enough strength. These are traders charts, and I'm going to tell you my honest opinion. That's a terrible chart. Pulling back, not enough range, not enough trend strength. Same thing with this. Any chart that had been a good chart that been good and then became bad isn't worth trading with this kind of pattern. It's not enough range. That's a bad chart. I wouldn't trade that. Rambus. That's okay. It's halfway decent. Not a great chart. There's better charts out there, but it is tradable up over the 46. So Rambus, I'll give a grudging pass to. STNG, that makes me think Star Trek Next Generation. But anyway, STNG. I like the volatility. What I don't like is the lack of consistency in the trend. Charts like this often whiffle waffle up and down. So even though it looks like it's in an uptrend, and it is, often if you look at history in this chart, they've been buying low, selling high. So if you do, I would only trade this over 60 and I'd trail a stop at 58, but I wouldn't be trading it just yet. It's a little too early. I want to see continued strength because it's at a sell area. It may well sell right back down right now, so I wouldn't be buying it now. Let's see, VRTS. That's an absolutely terrible chart. Too much sell pressure, and it's likely to go down to 195. Let's see, TSLL. I like the recent uptrend, but because it's right near resistance at 14, I'd wait until it gets over 15, Personally, I wouldn't be trading this just yet. It'd be a short under 11 would be the more likely play. Short 11, buy the 15. It is tradable though. The range is good, and that's a really good chart. TDW. That's the best chart so far that you guys came up with. Okay, nice clean range breakout, consistent trend, no big wiffle waffles. Buyers keep coming in. It'd be a good long over the 47. Let's see ON. Good strong breakout chart over the 88. It's a shooting, well, bearish upper shadow, but if it breaks the whole number 88, may be good later. That's okay tradable. This is a perfectly horrible chart. No range. Look at that. That's a crap chart. And Oxy Pete. No, it's not too good either. Though it's a Buffett favorite, not one of my favorites. And again, why would you trade a chart like that when instead you trade something like this, right? That's going up actually. So anyway, guys have been fantastic. I got to run. Got a busy day scheduled today. I want to thank you all for being here. I do take some time. We'll look at intraday charts in the live room and maybe next Saturday as well. So I've got a special for you guys. It's at trademastery.com/touchdown. You can get 3 months with me for like $4.97, something like that. It's a good deal. Put it together last night at the last minute because I wanted to have something to share with you that'd be worth your time and a little modest investment. So you get 3 months of, and mostly what I do is not this kind of swing trading stuff, but intraday charts. It's like maybe 80-90% day trading charts. I should probably show you which. You can look at a sample episode of my live room on that page. I did a video showing you what a typical day is like. But one chart that I really like, and one of my really smart traders, Mick, also likes is Boyle. That's the long nat gas. It's been beaten down. It's moving up nicely. So it's got a good upside. Got lots of good charts to work with, right? That'd be for more, it's swing or day trade. That one's kind of choppy. Yesterday was really a choppy day, right? We look at some of the prior days though, we had really good runs. Like SOX, as I called the long for my members back here. I sent you guys a chart with the screen cap. That's the long one I called it was somewhere down there near the bottom. Anyway, good volatile leveraged ETFs. I cover, I would say maybe 30% of the room time is focused on leveraged ETFs like TQQQ, SQQQ, SOXS, SOXL, UVXY, KULD, Boyle, LABD, LABU, anything that's leveraged and has a lot of range to it and a lot of consistency to it and a lot of strength behind it is something I like to cover in addition to the day's random cheap stock gappers and that kind of stuff. I personally prefer trading ETFs because the gaps or risk of large gap is minimal because ETFs don't make big gaps by definition. They make small gaps. And once if you're in the right sector and you get the right charts, they can really run up for you. So SOXs and also SQs was really good on Thursday, right? A parting thought, one alternative way to day trade is instead of trying to navigate the ups and downs on a chart like this, what I found in some of the days I've made the most money, at least in my own real trades, is what I call buy the open, sell the close. So instead of scalping for 30 or 50 cents inside of 8 minutes, kind of classic day trading, instead of more leisurely approach. And I would thank a family member for idea for this because it works. It's a good one. You buy right above the high on the open, like 935, 940, something that's going up, put a hard stop right under support and then walk away until the end of the day. And either you get stopped out or you get paid off a lot. And what an alternate is you can, once it runs up a bit, and say by 11 o'clock or lunchtime at 12, you can then pull your stop up to break even. So you're just playing with the house's money. And this is a really good example of a way to trade, and you can do well with that because you don't have to navigate. If you're like me, when I'm day trading, I use really tight stops, like 5 or 10 or 15 cents, and I get shaken out a lot when I do that with a choppy chart. It works great for big, strong charts, but choppy charts, you get death with 1,000 cuts. So instead of trading a lot with small stops, a lot of the charts are better traded on strength right on the open for an open range breakout play, right around 935, 940, and then just put a hard stop somewhere under the open, and then walk away, come back at 3:30 in the afternoon and see how you're doing, and then tighten up a trail stop or just sell at a market and book the profit on that. So it's another good example of a intelligent approach to active trading that I like to teach in the live room. So anyway, you guys have been great. Hopefully I'll see you there. You can go to trademastery.com/touchdown and join now. I'd like to see you there. And you have my word. I work very hard to answer all the questions. I give very step-by-step detailed walkthroughs with specific prices to use for paper trading only entries. So unlike any other room, before the bell, before 9:30, we have our trading plan all set up. We've got the entry prices to use on those instruments, usually 20, 30 cents above wherever they're at. Those are specifically identified for you before the bell. So you can put buy stop orders in and your paper trading or demo account and follow along. And then I will call the exits live or trailing stops and also re-entries for second entry. So thanks, Andy. Saying very good info. Appreciate it. Hey, sure thing, Andy. Can do. Hey, thanks, Mario. Will do. Hey, Ray. Hey, Andrew. Thanks, Ray. Thanks. Well, thanks everyone for your kind words. I appreciate it. All right, well, do take care, and I will see you guys hopefully in the live room. Super Bowl Sunday is coming up tomorrow. I think the Chiefs are going to win, but we'll see. It should be interesting. None of my teams that I really like. I like New Orleans. I like Dallas a lot, and of course our Denver, our Broncos here, but our Bronx. But should be an interesting Sunday and an interesting week ahead. We've got really good opportunity. There's never been a better time to day and swing trade today's markets because we're on the cusp of either a big ass drop or a nice rally up. We're right on that razor's edge of one or the other is going to likely occur, as you know, right? This next week or two. So good time to join me in the live room. Look over my shoulder. You can try this here with a 3-month deal. It's good through tomorrow midnight. So it's at trademastery.com/touchdown. Anyway, be safe. Have a great weekend ahead. Make some winning trades, and hopefully I can be a part of that. So thank you for your trust and your time. Best wishes to you and your family, and I hope that you guys have a fun weekend. We can see some of those crazy Super Bowl commercials, right? I'm told there's $7 million it costs to do a 30-second spot, so probably some creative commercials out there as well. All right, I'm going to wrap up here. So again, trademastery.com/touchdown. And I hope I can help you score virtual touchdowns in your trades as well. So do trade smart, and I will see you next time. Goodbye, traders, and thanks for being here. Have a great weekend. Bye for now. And join the room, trademastery.com/touchdown. Take care.